May profits be upon you. Welcome to another weekly Forex forecast. We're going to look at the indices, specifically the S&P, the NASDAQ, and the DOW. Now, bear this in mind. I am bullish on the US dollar. Now, there's usually a negative correlation between the indices and the US dollar. But over the last few weeks, those things have, those rules seem to have been blurred. So we're going to go into it. Let's start with the monthly time frame on the S&P. Right, you can see that we have a nice bullish impulse breaking structure. We are 100% bullish. There's no reason to look for any sells, not yet. You know, you're gonna go with the trend until the trend ends. You understand? All right. Now, what I want to see is where can we go? What is our next level? All right. Look how December is faring in the S&P. This is the December. This is the last 2 weeks. All right. The December monthly candle. What I want to see is the potential for a bullish fair value gap to form here to push prices higher. So I don't want to see too much of a wick come down into here. I want to see this formation happen. But right now, all we have is potential. All right, let's get rid of this because it hasn't happened yet. Okay. I don't know what's going on here. So all we have is potential there. Okay. So if we go down to the weekly, all right, this is where we have that monthly fair value gap. We'll hope will form. But what we have here, what we have here, is a bullish fair value gap here. All right, that is formed. Boom. All right, that will support higher prices. All right, and we can see price can easily sting down into this bullish fair value gap and then continue higher to this. Come on, dang on it, man. To this. Uh, uh, so buy side liquidity target for the week. Okay, so that's what I'm looking for this upcoming week for the S&P. Okay, if we go to the daily, you can see that uh, Wednesday uh, was an it was a failed swing, a failed swing. It failed to make a higher high here, right? And then right after that, on Thursday, we had bearishness, and then Friday found some more bearishness. However, all right, you can see the relative equal lows here, and I'm thinking that's going to be an interesting draw on liquidity. Come market open between Monday and Tuesday, we may see price take that relative equal low, those relative equal lows, and as as a as a sell side target, and we can just tap into tap into the weekly fair value gap and move up higher. All right, we do not have a daily fair value gap to target, but we do have some discount arrays here. All right, once we take that low and once we take the the weekly fair value gap here, we can continue higher. Right? What do you think? So let me know what you think down in the comments. Let's look at the NASDAQ. NASDAQ's going to be similar, but a little bit different. All right, what we have here is a stronger asset. All right, you can see the sell off, the sell down to the buy up, right, and that has formed an order block, an area of fair value, and price traded through it, expanded through it, and also left in its wake a weekly fair value gap. Now, I like to see that. Let me put that in there. All right. So this supports higher prices. There's no reason to look for shorts here. No reason whatsoever. All right. Because it's all bullish. All right. If we go down to the daily, we can see that price already pulled back into the weekly fair. Well, actually, this is the formation of that actually is the top of the formation of this weekly fair value gap. But if we look at the S&P, look at that day. All right, this is December 10th. I believe that's the same day there. Am I right? December 10th. December 10th is the top of the fair value gap. I'm looking for price. If we see some follow through, if we see some follow through, this will be a long drop, a very long drop, and I'm not sure it does that. All right, this was an interesting uh, uh, discount array. All right, this low. If price does come there, because we have the intersection of the top of the order block there, and this we inside of this weekly bullish fair value gap, I'd like to see price push higher from here. All right, for sure. If it comes down here, I don't think it does, because that's a pretty good distance. If it does, that's fine. I'll be prepared to take along. But we have another area of fair value here, and I like that area where it is, and price is already traded into it and pushed higher from it. Can we go higher from here? We certainly could. Let's see if we find support for that on the lower time frames. All right. You can see that big wick goes down inside of there. All right, but the closes are here and here. And this is the sell down before the buy up. Okay. Uh, we could very well find bullish fair value gaps inside of this wick that will support higher prices from this area, because we have a couple of confluences over here, don't we? Uh, we'll see how price opens up come Monday. But price did come up here, and there was no follow through in this leg. I don't want to see price. Honestly, I don't want to see price. Uh, wrong one. I don't want to see price go past the 50% of these long wicks. If you've been watching my videos, you know I have a thing where I look at this as a range, and a lot of times price will not come past the 50% of these long wicks. All right. When you don't see the follow through, yeah, there's a reason for it, and I'm betting that price will probably find support here for higher prices. Okay. But that's in the 4 hour. If we just go back, sorry, I don't know what just happened there. If we go back here, uh, this yeah, there you go. Yeah. We just stay here. You can see prices. That area is in this wick. All right. Price kind of receded from that wick, but I'm looking for prices to find support in this area for higher prices, perhaps at the low, and this will become the drawn liquidity for the week. All right, this high. Let's see. Let's see how it rolls. All right. But I like the strength of the NASDAQ when compared on the weekly, when compared to the S&P. One, two, three, and then we turn over. Yeah, we have a fair value gap there. That's cool. We got support. But the NASDAQ traded through that high, traded through it. I like it. I like that a lot. So, uh, we'll see what we got for high price. Now, here's where the difference lies. All right, this is the weekly on the Dow, the Dow Jones. Price had a bullish fair value gap on the weekly, and price ran through it. All right, ran through it. All right. Yeah, there was a bullish pattern here where you can see an area of fair value. Price ran through to the middle point. All right. Now, what I'd like to do is go to the daily and look at price. All right. And I'm going to do something called a measured move here in a second. Look, watch. You can see how price pushes up, pulls back, pushes up, pulls back, pushes up, and we are in the pullback. And when I see pullbacks, I automatically get my Fibonacci retracement tool out, right? Top to bottom, from the low to the high, with breaking that high. So I'm looking for I'm trying to measure that pullback, and we are at the golden ratio, and there happens to be a bullish fair value gap there. So I'm definitely going to be watching this area. Okay, I tried to draw something. Definitely going to be watching this area to see if we get this. Now I would look over here. Here's the deal. I want you to see. I want you to see something. All right. I was looking at this fair value gap up here. All right. I think that was on the weekly, if I'm not mistaken. Yeah, there was a weekly fair value gap up here, and price did not use it to go higher. It went lower. All right. And we could be coming down to this area of fair value that's already been used. And it would leave me to look for a bullish fair value gap in this to see if price still supports higher prices, where it could find support and then go higher. And uh, we found that intersecting fair value gap there. So with the measured move, what that is you're just looking at these moves here. There's the impulses. You're measuring the impulses to see if price will go higher. It could go higher. What the potential of it is. You just measure from the swing low to the swing high. All right. And you move that to the next swing low to the swing high. All right. And you can see we got 100% of this move right here. All right. Now, when I measure the moves, I like to use the Fibonacci retracement tool, the trend-based one. All right. Fibonacci extension. All right. And what I do is I go from the swing low to the swing high. That looks like the swing high. And to this swing low. All right. It's not a swing yet. It hasn't swung yet. I'm just saying that this is potentially the swing low. All right. And I would like to see price either make the 80% or the 100%. Look at this. Oops. Why is that coming up there? All right. If we do it from here, from that swing low to that swing high to that swing low, move it all the way to the left, you can see that we nearly made the 80% and we have the 100%. I believe this move, excuse me, I believe this, I got some things happening here. I don't know. All right. I believe this move here will complete this 100%, the 100% of this move here at the 100%. I believe this move is doable for the week ahead, but that's providing that price finds the support it needs for higher prices there. So it's a lot to watch. And but I also want to point out that this is the only indice that seems to be correlated negatively with with the U.S. dollar or the U.S. dollar index. Look at that. Look how it pushed down, and then look at the Dixie, how it pushed up. This is the only one doing that. So it seems to be still sensitive to the correlation. You understand? So if price continues higher in the U.S. dollar, which I think it will, uh, then the Dow, come on, all right, the Dow may break that fair value gap. It may break through that fair value gap, and this then becomes uh, the area where I would look for as a break of market structure to the downside. And my bias will change just in the Dow. My bias will change from bullish to bearish. Right now, we're in between. All right. And we'll see what happens with this fair value gap. But if we break through that fair value gap, if we happen to drop through, this is the line this is my line of deviation. If price goes through that, this becomes a breaker. This becomes a breaker, right? And come on, man, what is that? All right, this becomes a breaker, and I would be looking for lower prices after this. I would look for a break below, I'll pull back into it, and I'll be looking for fair value gaps somewhere in this leg of structure that price could come back to, and continue lower from. That's a whole lot to look ahead for, but these are things that are on my mind anyway. So I hope you enjoyed this. Make sure you smash that like button and hit the boost button. All right. Don't forget to subscribe to my channel if you want to check the updates that I put in the comment section throughout the week. All right. Look at the two videos that I got up on your screen right now, both left and right, because those are the ones I just put out. And I will see you in the next video. Thank you for watching.